Hello and welcome to the look ahead for Friday, the 19th of April, with me, Fiona Sincota, Senior Market Analyst at City Index. So, overnight, we'll be looking out for inflation data from Japan. That'll be followed by German producer prices in the European session and UK retail sales. And then on the earnings front, a couple of big ones to be watching out for from Procter and Gamble and American Express. So we'll just start with UK retail sales. Now we're expecting retail sales to increase by 0.3% month on month in March. That's up from 0% in February. So that if we do see some growth in retail sales, that will be an encouraging sign. Given that we have seen some signs that the UK economy is ramping up a little bit after stalling and going into recession at the end of the last quarter. Now, the data comes after we've had inflation data earlier this week, which cooled by less than expected. But we're also getting very mixed messages from the Bank of England. Now, Bank of England, Andrew Bailey was quite confident that UK inflation is on the right trajectory and it's heading in the right direction for a rate cut. Then we've also had Megan Green, a known hawk from the Bank of England, sort of really pushing back against rate cuts anytime soon. Now, let's see how this is all playing out for the pound US dollar. You can see that's been trending down really. It's fallen from relatively high levels down to a low of 124. And that was the low that we've seen in April. It's also the 2024 low. Now, we have picked up from that level, and buyers are trying to push the pound towards 125. And I think this is the divergence between the rate cut expectations paying off between the Federal Reserve, who's not expected to really start cutting interest rates until much later this year now, given the sticky inflation, and compared to the Bank of England, who are giving those mixed messages, but broadly speaking, are expected to start cutting interest rates before the Federal Reserve. So if we do get some weak data, then we could see pound fall further. Sellers are going to be looking to take out that 124 level in order to create a lower low and to sort of send the sterling US dollar towards the 123. If we get stronger than expected data, that could see the market just reassess the likelihood of a sooner rate cut, push back in rate cut bets and the expectations, and that could see the pound lift towards the 125 level. Above 125, we've got the 200 SMA at 125.80, so that would be the next level to watch on the upside. Also mentioned, we've got Japanese inflation out overnight. Japanese inflation is expected to cool just ever so slightly to 2.7%, down from 2.8%. Inflation has been cooling. We've seen obviously some the first rate hike from the Bank of Japan in 17 years last month. But that's done nothing to offer support to the yen, which we have a look here at the US dollar yen chart, has risen really quite sharply higher, taken out the 34-year highs as it just tests 155. Now, if we get cooler than expected inflation, that's going to really support the view that the Bank of Japan are going to keep interest rates where they are for the foreseeable future. And that could put some pressure on the yen, which could potentially push this pair higher. Now, that 155 level is the line in the sand at the moment. That's where the market sort of seems to be thinking that there might be some intervention. And those intervention fears are very sort of real as far as the USD Japanese yen is concerned. We've had threats from Japanese authorities that they may step in to support the yen, which could see the pair actually fall, because obviously that would be the yen strengthening against a weaker US dollar. So that 155 level is quite important as far as intervention is concerned. If we do see a break above that, then watch out for 160. But if we do see I'm probably going to see the market act quite jittery around that level. It's also the rising trend line resistance that we've seen that it's hitting off against. So just as far as levels on the downside is concerned, watch out for the a minor support around the 153.25 level. But I think the real major support on the downside is at 151.90. That was the previous high that we saw in March. So that's that. Then as far as earnings are going to be concerned, let's just take a quick look. I said, we've got a couple of earnings from American Express and Procter & Gamble. So it gives us a good opportunity just to take a look to see what is going on with the S&P. Now, we don't have any major US economic data. There are several Fed speakers who will be in focus, such as Williams and Bostic. So the market's going to be continuing to watch out for clues as to, what the Fed is thinking as far as rate cuts are concerned. We know that we've got sticky inflation in the US. We've had strong, robust data. The economy seems to be holding up pretty well. There's nothing really that screams the Fed needs to be cutting interest rates right now. Jobless claims came in today. Again, they were slightly stronger than expected. And, we've seen this reflected in comments from Powell earlier this week, who raised questions about, he said that the Fed may have to delay rate cuts if there is slow progress towards cooling inflation to that 2% target, which there does seem to be right now. And as a result, we've seen a sell-off in equities. Let's not forget that impressive rally that we've seen over the last 6 months, 6 months, I was going to say, but maybe, the end of the fourth quarter of last year and the first quarter of this year was on the back that the Federal Reserve, or expectations that the Federal Reserve was going to start cutting interest rates soon. And with that now being pushed back, are they even going to cut interest rates at all this year? I think that's the next question to be asking, because right now the data is not pointing to the need for any rate cuts. So we've seen the S&P sell off. I think, it'll be good to see earnings season now ramping up. So it does give a little bit more focus to the markets as far as fundamentals are concerned, to see whether the fundamentals are supporting the valuations that we've got. As far as the S&P is concerned, we are seeing it sort of just really testing the 50-50 level at the moment. I mean, obviously, if we get a break below that, 5,000 is going to be a very key level to be watching on the downside, ahead of the 100 SMA at 49.35. On the upside, 51.50. That's going to be a level to be watching on the upside. That's sort of the previous support when it was trading in a holding pattern. And just finally, I think the other one to be watching tomorrow is going to be oil. Oil's been very much in focus this week. We've seen this really big sell-off in oil this week. We saw oil drop 3% yesterday. It's sold off further today. I mean, if we just look at that chart, it's dropped from around 87.75 on Friday last week to current levels of around 81.75. So down quite a lot. We've seen basically this is concerns about the demand outlook. So, the fact that the Federal Reserve and other central banks may be keeping interest rates high for longer means that that's going to could have a slowing effect on the economy, which is bad news for the demand outlook. Then that sort of, at the same time, we've got the risk premium on oil is starting to deteriorate as the market seems to be more relaxed about the fact that Israel may not retaliate against Iran's weekend attacks. So that's sort of seen the risk premium come off oil as well, which is also bringing that price lower. As far as levels to be watching, I said it's down from 87.75 down to around 81.75 at the moment. On the downside, watch out for $80 per barrel. That is the round number. And then below that, watch out for around 79.60. You got the 200 SMA and 77.40. On the upside, buyers are going to need to try to break above the 83.10 level. That was the August 2023 high, in order to push back towards the 87.75 level. Thank you very much for watching. I hope that you've liked what you've seen. And if you have, then please do give this video a like. And if you would like to receive more videos like this, then please do subscribe.